Okay, I guess I'll take it from here. Thank you so much for having me on, and really glad to be back with all of you. I missed the last event. Unfortunately, I wasn't feeling very well. Do have a bit of a lingering cough left over, but I'll try to do my best not to cough into the microphone. Really glad all of you, excuse me, could be here with us today. Today I'm going to share with you a day trading strategy that I've been using for a little while now. I really hope you enjoy it. It's something that is very useful for this type of market, and hopefully as we go through the presentation, I'll be able to share with you many examples. So welcome once again. Please do remember that trading can be risky, so please don't trade with real money until you're completely comfortable using with whatever system that you are using. Now, as Renee mentioned, I'm Vince Vora. I'm the head trader here at Trading Wins. I have been doing this for a little over 30 years, and throughout that time, have developed several strategies and trading systems, many of which are now not only used by retail traders such as yourself, but also many money managers and hedge funds. Now, before I get started, before every presentation, I like to ask one simple poll question, and that is, how many of you have seen me present at an event or a webinar such as this before? Please just take a moment, type in your chat yes or no. I'm going to grab a sip of water, and then we'll get right into this. All right. Excellent. Thank you so much. Okay. So, what I'm planning to cover today is I'm going to start off talking a bit about the challenges of day trading. We'll spend just a couple minutes on that, and then we'll talk about the 4 keys, 4 items that I think are absolutely vital to your success as a day trader. And then I'm going to walk you through the strategy that I've been using with my live charts. We'll go step by step, we'll build the chart layout, and then we'll go through many examples. And hopefully we'll still have time at the end of this presentation for Q&A. All right, so when it comes to day trading, it really can feel like this sometimes. It can be quite a ride. Now, before I get into a bit more of it, how many of you have actually tried it before? How many of you have actually taken a stab at day trading? And please be honest, if you failed, please let me know. It's certainly a lot more common to fail at this than it is to succeed. Hopefully by the end of this presentation, I'll give you a method that you can walk away and succeed with, because it really can be a lot simpler than what it ends up being for most people. Unfortunately, as traders, sometimes we are our worst enemies, and I'm going to try and show you here a system that is not only effective, but it's very simple and easy to execute. All right, so let's talk about the 4 keys to day trading success. Now, without these, you're going to have a very difficult time succeeding. When the main one is discipline. I'm sure you've heard it over and over again, but discipline is a habit that you need to form, and once you form that habit and be consistent, you'll be surprised at how well you can do with this. But getting there is a challenge. But I want you to think of your job as a trader as this, very simple. You need to spot a pattern that we know repeats itself, and I'm going to give you that pattern today. You need to spot it and then execute on it, and then just repeat that. So it becomes rinse and repeat. That's all you need to do over and over again, is find that pattern and execute on it. And again, I'll go through that pattern with you today. Focus is absolutely key. When you sit down to day trade, shut off CNBC or any other TV, radio, whatever you're doing. The fact that you're trading on an intraday time frame, that alone in itself means things are going to be excuse me, happening a lot quicker than usual. You don't have the luxury of looking for a pattern and thinking through it in your head during aftermarket hours when things are closed and you have all the time in the world. When you're day trading, it has to be at that moment, and you have to be not only quick to recognize it but to act on it. So you really do need to focus. Thirdly, risk. Now, when most people think of day trading, they immediately associate a high level of risk with it. And in most cases, that's true, but it doesn't have to be that way. And I'll prove that to you today. You can do this and do so in a way that is very, very risk averse and very, very safe. You can still participate in huge rewards, but there's no need to expose yourself to a lot of risk while you're doing this. I'll show you exactly how that's going to work. And then, of course, you need to be able to think strategically. And what I mean by that is you want to be a step or two ahead of this setup. And the way you do that, again, is to recognize it and be ready to act on it. But not only that, you need to understand exactly when and where and why you're going to execute that order, and also know what your exit is going to be before you ever even get into that order. We're going to cover all of that. Okay, so again, the golden rules for success here is to track your trades, and this is going to allow you to measure whether or not you're building the right habits. Those 4 keys are measurable here, and if you track your trades and review them periodically, quickly, very, very quickly, you're going to be able to understand why you lost on certain trades and why you made money on other trades. If you don't track it, if you don't review your performance, you're not going to get any better at this. So tracking your trades is absolutely vital. And then consistency. That's the main thing. And you do that by tracking those trades and making those slight adjustments to your trading. But you need to spot it and work it. And once you become consistent, everything falls into place. That is the only way you're going to become a specialist at this. Okay? So let's get started. Let me bring up my chart here and start walking you through this setup. So first of all, one quick tip when you're trading. One thing to really sort of put the odds in your favor right away is to only trade charts that are trending nicely one way or the other. It really doesn't matter whether it's up or down, but there needs to be a nice solid trend in place. Easy to spot, very predictable, and much, much easier to trade. So have a look at NVIDIA here. This has had a phenomenal year and pretty easy to trade this type of chart compared to something like this. When you see something like this, first of all, if I were to ask you what the next direction of the stock is going to be, the best you can do is flat out guess, which is exactly really what you don't want to do when you're trading. But you know, your likelihood of getting stopped out on a chart like this is much, much higher. So, sorry, I believe someone's got their mic on. If everyone can just check their mic and turn it off, there's some background noise. So, if you can build a watch list of stocks that look like NVIDIA, or that are at least trending one way or the other strongly, and then just sit back and wait for those trade setups to come by, you will be well on your way to being very, very consistent. Okay? So let's talk about the day trading strategy, and let's build this together. I'm going to switch to Dollar Tree here, and I'm going to switch down to a 5-minute chart. Okay? Now, I do want to say that this works on any time frame and any market. It's based solely on technical analysis, so anything you can build a chart on, this will work on. Okay, so yes, I'm going to be showing you intraday time frames here, but I'll also, if I have time, get to the daily, the weekly, the monthly, just to show you how this works, and hopefully we'll have time to go over some forex pairs and futures contracts along with several stocks. Okay, so let's have a look at this chart and let's start building this. Now there's going to be 5 indicators I'm going to be adding on this chart here. One of them I use excuse me, on just about every strategy I've built over the years, and that is the 20-period simple moving average. Okay, just going to quickly add this on here. Take this up to 20 and add this on here. All right. Now, the reason why I like to trade with the 20-period moving average here is because, number one, for you to measure momentum, the easiest way to do so is measure the slope of the price action. You see here, Dollar Tree during this time was pretty much straight up. Now, that 20-period moving average draws that line in for you. But where it really comes in handy is when you get these retracements. Okay? If you simply measure the slope of the price action during some type of pullback like we see here, it would be easy to make the mistake of thinking that this is now a downtrend, when in fact, if you look at the 20-period moving average, it continues to slope higher, helping you understand that this is just a temporary pullback before a continuation of that move. So that's where it really comes in handy. Now, secondly, we are going to add in an indicator that has been very popular over in Asia for many years and is actually used as a strategy in itself. But we are going to be using it for trend. And this is the Ichimoku Kinko Hyo indicator. Now I'm using the default settings. I'm going to leave the default settings of 9 and 26. But I'm going to uncheck here and make invisible 3 of these lines, which are the Tenkan line, the Kijun line, and the Chiku line. These are moving averages that are attached to this, so they're calculated slightly differently. I'm going to remove those and just leave the span A and the span B, which are the cloud portion. Let's throw that on, and there you go. Now, it's going to be shaded either yellow or pink here, and what this is telling you is while we're going to be using it for trend, I don't really use it the typical way that it's meant to be used. Normally, these clouds, when they're yellow, they're bullish, and the thicker they are, the more bullish the trend is at that time. That's the way to look at it. But they're also used for support and resistance. In other words, you'll notice that when price pulls back to this, more often than not, it bounces right off it. They're very good for support and resistance, but I like to use it for trend. So when the price and the moving average are above the cloud, we consider that an uptrend. When both the price and the moving average are below the cloud, we consider that a downtrend. And when one or both are overlapping, we consider that a consolidating phase that we don't want to trade in. Okay? So that's very simple. So in a split second when you bring up a chart, you should be able to tell if there is a trend in place and what that trend is. And then you should be able to tell whether or not you have momentum behind that move. So any slope on that moving average, the more significant the better, of course, will help you read momentum. Okay? Now, we are also going to add the Commodity Channel Index, the CCI here. Now we're going to change the settings on the CCI. Because we're going to be using this for intraday time frames, we want to use a much more responsive CCI. So normally we have a setting of 14. We are going to drop that to 5. Okay? And normally this has lines at the 100 and the minus 100 levels because it's an indicator that's typically used to identify overbought and oversold conditions. We are going to be using this slightly differently. We're going to be using this indicator to help us identify our entry point. So we are going to remove those lines, and we are simply going to draw a line at the 0 level. Okay? So we're going to uncheck the oversold and the overbought lines, and we're going to leave a line at the 0 level here. Okay? Actually, I'm going to just change the color of this quickly. Let's make that red. It'll stand out a little more and thicken it up. There we go. So I'll tell you how this all comes together in a moment. I do want to throw one more indicator on here before we talk about the entries and the exits, and that is the moving average convergence divergence, which is the MACD, but I prefer the histogram, the MACD histogram. Okay? Now, we are also going to dramatically change these settings. Again, we want this to be much more responsive. So instead of the usual 12, 26, and 9, we are going to drop this to 4, to 5 here, and then 13. So 4, 5, and 13 are the settings we're going to use on the MACD histogram here. I'm just going to thicken it up a little, leave it as a histogram, and throw that on there. There we go. Hopefully you can all see that very clearly. Now there is one more indicator that we use to help us identify the exit points. I'll leave that off for now. Let me go through examples of the entries, and then we'll look at the exits. So, two things you always want to trade with, and that is trend and momentum. Okay? Again, how do we judge trend? Well, if price is above, price and the moving average, that is above the cloud, that's an uptrend. Okay? So if we're looking at this area here, clearly both are above the cloud, so we're in an uptrend. Now, second question is, do we have momentum behind the move? Is there a slope higher here on the moving average? Yes, there is. Right in here, it slopes higher. So at this point, we know we have trend and momentum on our side. All we need to do is focus our attention down here to the two indicators. And what we want to look at or identify is the area where both the CCI and the MACD go from negative to positive here, meaning from below 0 to above 0 at the same time. Now, they don't have to cross at the exact same time, but we want to identify that point where both are above that 0 line. So if you can see here, right on this bar, here, let me highlight it for you, right here, this first larger green bar right there. Can everyone see that? So that is the bar, and if you look at the crosshair here, where the MACD went from red to green here, went from below 0 to above 0, and same with the CCI, it crossed from below to above. Okay? So that becomes our setup candle. Once we have identified our setup candle, all we need to do is mark the high of that candle and wait for a trade above it. As soon as we get a trade above it, we're able to enter long here, and we can do so by buying the stock, by buying a call option, by selling a put credit spread somewhere down here. There's many ways to trade this. And then staying in that trade until we get that exit signal, which the other indicator I'm about to add on in a moment will identify for us. Okay? So very simple. You need to look for an uptrend, in this case for a long trade, meaning price and moving average above the cloud, and we need a slope higher in the moving average, which we have, and then we simply identify that point where both the MACD and the CCI are above 0. That becomes our setup candle. Mark the high. Any trade above it, we go long. Okay? Now, before we talk about the exit and look at many other examples, let's talk about a short trade. Well, it's pretty much the same thing, only in reverse. In other words, obviously we're looking for price and the moving average to be below the cloud. So we have a downtrend. And then we're looking for a slope lower here on the moving average. That tells us we have momentum to the downside. Once we have both of those conditions, we turn our attention here down to the two indicators, and we find the spot where the MACD and the CCI both turn and go negative, go below 0. Okay? Now, that happened on this candle here, but the moving average was still fairly flat. Okay, and we had just moved through this cloud here. So let's say we skip that one, but now right in here is where you can see the MACD, after going positive for a few bars, turns negative again. The CCI is also below 0 here. So now it is this bar here that is our setup candle. We mark the low of that bar. Once we get a trade below it, we go short, and you can see what happened next. Okay, why again, momentum. Whenever you have trend and momentum in your favor, you know, half the battle's already won. So it's huge. So all we're really doing with this is identifying a safe area to enter for an extension of that move. Now, before I show you the exit, one thing to keep in mind is that normally when you see price move from one side of the cloud to the other, and you get across through that cloud with the moving average, but with a slope already in place, that's usually a sign of a much bigger move coming in that direction. It's a huge heads up. And it's also a great way to build a watch list. So if you can build a watch list of stocks that have just moved from one side of the cloud to the other with a slope in that moving average already, it usually leads to a much bigger move in that direction. So whenever you can find a cross, and here it was pretty flat, it was pretty quiet, then we gain momentum. But especially when you cross with a slope already in place, it's huge. And as we go through the different examples, I'll point it out for you. You'll see how well this works. So now that we've talked about the entry criteria, let's talk about the exit. And for that, we are going to use a very popular indicator that's widely used for exits, which is the parabolic SAR. Now again, we're going to change the settings on this. Normally, you get a default setting of 0.08 and 0.9. We're going to reduce this big time here. I'll show you. I already reduced it as 0.02 to 0.2. Okay? So I'm going to leave it as dots here. I'm just maybe going to thicken it up a little. And throw this on. There we go. So hopefully you can see those. So what these dots represent, really, is a trailing stop. In other words, they identify the level where you should be trailing your stop. Okay? Now, if we look at the long trade here, when we first identified our setup candle here, where you can place your stop initially, you can place it at the most recent pivot low, which is usually very close behind, or just go with wherever the parabolic SAR is marking for you. So in other words, as long as price remains above these dots, you will remain in the trade. But once the stock reaches the level of that dot, in other words, like back over here, it traded below that dot. And you can see that on this bar, when that happened, the dot switched and went above the bar. Okay? So as long as it's above, as long as it's below the bar, you remain long. As soon as it crosses, price crosses that dot, and the dot appears at the top, you exit that trade. So in this case, you would have been in here from the $77 area up to this dot area, which was about 79.5, so about a $2.50 move. Now remember, this is a 5-minute chart. That's a pretty substantial move on a 5-minute chart. That was from about, the open around 9:30 to about 11:30 or so. A couple of hours, $2.50 move. Very nice. And you can see if we move over here to the short trade we took, once this was the setup bar we were talking about, and the parabolic SCR was already above those candles. So once you get short, you remain short until price breaks above one of those dots and switches. And now you can see that here when it happened, the dot went below. So visually, it's very easy to follow. Not only is the setup easy to spot and easy to execute on, but it helps you remain disciplined because all you really have to do is follow those dots. And it is a very conservative system as well because we have such a tight setting on this parabolic SAR, which again is 0.02 and 0.2. It's about as tight as you can get it. Through the life of the trade, this will become tighter and tighter. In other words, the longer you remain in that trade, the tighter, the closer the trailing stop becomes. Okay? So I'll show you a few other examples. We still have a few minutes here. Let's stick with the 5-minute for a second and look at Adobe. Now, remember, one easy heads up that a bigger move is coming is when price crosses from one side of the cloud to the other, and it does so with a significant slope in that 20-period moving average. So you can see here, we move from below the cloud to above, and that 20-period moving average in blue here was already sloping higher. And look where it took us, right? So now, our job, once we see that cross, and once we know that we have an uptrend, a new uptrend in place, and we have momentum behind that move, is to sit back and wait for the indicators to tell us when to get in, okay? And again, what we're looking for here for a long trade is that point where the MACD and the CCI are both positive. Now, if you look at this case here, this was the candle right here, okay? Now, remember, once you identify that setup candle, which is the candle where both the CCI and the MACD are both positive, you don't just jump in, you have to mark the high of it, okay? And wait for a trade above it. In this case, that trade did not happen, okay? So it was a setup, but actual no trade. And then we sit back, MACD goes negative again, CCI goes negative again, and then they cross back above, okay? This time, there is a trade above the high. We get in right around here, and then we just follow the parabolic SAR until it tells us to exit. Very, very simple. Now, of course, the system is not perfect. You will not have 100% winners. You should never expect that. But by following these rules, if a trade turns on you, the parabolic SAR will get you up fairly quickly. So the key here is to have more winners than losers, but the main point is that your winners should be bigger than your losers, okay? Follow the rules, keep a very close eye on that parabolic SAR. And then throughout the life of that trade, there'll be a lot of zigzags and a lot more opportunities to get in. There's another opportunity back in here, okay? You see we had a significant pullback where the moving average started sloping lower, then flattened out, then started sloping higher again. So remember the conditions. You have price and moving average above the cloud, and you have a slope on that 20-period moving average. Once you do, then you look for that point where the MACD and the CCI are both positive. In this case, happens right in here, and then off it goes, and you just follow that parabolic SAR. Okay, very simple. Let's try to squeeze in a number of other examples here. I'm going to switch actually to a 15-minute chart. How many of you trade on a 15-minute chart? I really like the 15-minute and actually the hourly as well myself. If we stick with Adobe here, look, number of nice trades in here. I'll zoom in. Let me get rid of these lines. But here's another perfect example. Okay, price and moving average above the cloud. We do have a slope higher on the moving average. We wait for the point where we go from negative to positive on the MACD. There it is. CCI is already positive. This is our setup candle right in here. Right in here. We mark the high of it. We get a break above that high right away, and off it goes. And we just follow along with those dots until we exit that trade, until that dot has been violated, and then we get out. Okay? Very, very simple. Let's look at another one here. Let's look at Biogen. And again, the more predictable these charts, the better. So in other words, the cleaner they are, the stronger the trend in place, the easier it will be, the less likely you will be to get stopped out, etc. So there'll be plenty of these setups. You can afford to be very, very selective and very picky with these trades. But again, throughout the life of this trend, all you're doing is confirming that that moving average remains with a slope higher, and then you're just waiting for any sort of consolidation phase or some kind of pullback, and wait for the MACD to go from negative to positive, confirm that the CCI is above zero as well. This is the bar that did it right here. This is the setup bar. Right in here, we mark the high of this bar, wait for a trade above it, which happens in the very next bar, and then we go long, and then we just watch these dots, and we wait. And so in this case, going from about we'll call it 272 in this area, and exit around 275. So a nice $3 move there. Again, these are 15-minute bars. You're not in that trade for very long, but nice and easy, and it's a high probability trade. Okay, so I see someone's asking that they say they mostly swing trade. Can I use the same setting? Yes, you can. So let's look at some of the higher time frames right now. Let's go to a daily chart, for example. Okay, and look. So now whenever you bring up a chart, remember, you want a nice clean chart. You're going to get a different picture from time frame to time frame. So Biogen on a 15-minute was trending nicely. If you look at it on the daily, it's not so nice, is it? It's kind of choppy all over the place. This is not a high probability chart you want to be trading. Have a look at something like Goldman Sachs that recently had a nice run here. When it's trending strongly and has a nice strong slope, that's what you want to look for. That's how you're going to stack the odds in your favor. So here's a daily time frame, same settings on all these indicators. It works exactly the same. All you're doing is waiting for this A to be above the cloud and B to have a slope. So any setup in this area when the moving average is flat, you could take it. You're just taking a little more risk. So why bother when there's plenty of setups and you can simply sit back and wait for a slope? So right in here, this green bar right here on the MACD went from negative to positive, and look at my cross here, the CCI was already above zero. This was the bar. This green bar right in here is the setup bar. Okay? Mark the high. And for me, I like to use the rule where it needs to break above that high in the next 2 bars. If it doesn't happen within 2 bars, then I move on to another trade. But this obviously broke above there. You get long, and now you remain long until these dots tell you it's time to exit. Now, let's say you hadn't missed this one, okay? And now Goldman moves higher, suddenly it starts going sideways. Look what happens to the MACD when it goes sideways. It goes negative, okay? So, do we have a nice strong trend in place? Yes, we do. We have nice momentum? Yes, we do. Look at that slope. We just wait for MACD to go positive again. Is the CCI positive? Yes, it is. You could have entered in here and taken advantage of the rest of that trade. So the stronger the slope in the 20, the higher the probability of this trade continuing to move in that direction. So that's a huge piece. And if you can catch the move when you get a cross, the initial cross from one side of the cloud to the other with momentum, is huge. That's when you want to put this stock on your watch list, because that's giving you a heads up that this kind of move is going to happen. Okay? It's as simple as that, and it works the same way to the downside. Let's look at the weekly time frame. All right? Let's. How many of you trade Forex? Let's look at the USD CAD pair. We can pick any currency pair. Let me try to type that in again. USD CAD, and let's go to the weekly time frame. here and zoom in a little. It works exactly the same. You don't change the settings, you don't change the rules, it all remains the same. Once you start sloping higher on that moving average and you're above the cloud, you wait to go from negative to positive on the MACD, confirm the CCI is above zero, mark that high here, and take that trade and then follow the dots. That simple. Whether it's a 5-minute, 15-minute, hourly, daily, weekly, monthly, it really doesn't matter. Okay? So now, you don't want to be taking short trades above the cloud. Remember, you want to wait for all the proper criteria. You want to wait till you're below the cloud. Let's go back here, see if there was anything. And right in here, when you see a trade starting to turn like this and everything goes negative, but it happens while you're in the cloud, okay, just understand you shouldn't take those trades. There's a lot more added risk. First of all, look at the moving average, completely flat. In fact, it was kind of pointing higher here. Now, yes, did this work out? Did it fall apart here? It did, but if you take the majority of these, you're going to have more losers than winners. You want more winners than losers. So stick to the rules, be patient, and let those setups come to you. Okay, let's look at let's quickly do a monthly trade before I move on here, and let's look at NVIDIA again. We look at many others. Look, here's after a long period of consolidation, what happened? We moved from below the cloud to above with a slight slope, right? Now, even if you hadn't caught the move initially, once it pulls back on you, okay, you see how the CCI went negative and then went positive? Was the MACD positive at that time? Yes, it was. You could have jumped right back in right here. Follow those dots, you're still in that trade, okay? Look at anything, pretty much anything on a monthly. Look at Visa here, okay? Look at Home Depot. Whether you're trading for the long term, whether you're day trading, I mean, I like to use this strategy mainly for day trading. That's why we adjusted the settings the way we did. But it works just as effective on any time frame and any market because it is based solely on technical analysis. David is asking, does it work on futures? Yes, it does. Let's look at gold, for example. Gold futures here. Now, this is the monthly, okay? Again, any time frame. But as we actually, there's not enough data for the cloud here. Let's go back to the weekly time frame here on gold. Okay, take any of these areas. Here, gold futures. Now look, moving from one side of the cloud to the other, and look at the slope of that 20. So at this point, we knew there was an extended move coming in that direction. What do we have to wait for? Just some sort of pullback here or consolidation. Let that MACD go positive and then negative. Once it goes negative and the CCI is negative, that's when you get short, and then you follow those dots. Okay, let's look at crude futures. Same thing. Remember when crude was over $100 here, and then it completely collapsed? There's that sign. There's that heads up coming through the cloud, and there's that slope. It already had that slope, okay? And then you just pick off those trades. So right in here, look, if I zoom in, you see how the MACD had gone positive, then negative, okay? And the CCI was negative, so this right here was your setup bar. Okay? Mark the low, and there it is. And then you just follow those dots. Okay, so no matter what market it is, no matter what time frame it is, it's very consistent and works very well. So how can you build on this? How can you make this even better? Well, we've put together a great pro training class for you, where during this class, I build on those 4 keys to success that we talked about. I go into it in a lot more detail and also show you a very quick and easy way to calculate your risk-reward ratio on every trade, no matter what time frame you're trading on, so that you can really separate the average trades from the higher probability trades. And I also show you a way to build a great watch list, and I'm actually going to share with you my watch list, the list I day trade with on a regular basis. Also talking about time frames, we're also going to how to trade with multiple time frames here, which is a very effective technique as well. And also for those of you who trade options, I'm going to show you how to leverage this system with options. And then as a bonus, we're going to give you a 30-day membership to our pro service where you'll receive daily videos from me recapping what happened in the markets, giving you several trade ideas. We also have with the pro membership 2 live market chats every week, every Monday evening and every Thursday morning. You get to come into our room, ask me any trading related question you like. It doesn't have to be on this system, it can be on anything. My job is to try to help you become a better trader, and you get access to a lot of other premium education content on our site that you can view at your leisure. So we always like to do something special for the folks at Investor Inspiration. We've only done this one other time. We're doing it again today. Tradingwins.com/now is the link. It should be in your chat box. Tradingwins.com/now, and you get this whole package for just $3. Really all we're asking is that you try this out. Send me a note. Let me know how it's working for you, and join us on the chats. We'd love for you to become part of our family. Really, we're very proud of what we do here, and we just want you to join us and see for yourself. Now, I think I have a couple of quick minutes here for questions. I'm going to ask our coaching coordinator, Raul, to join me and come in and quickly try to read off as many as he can for us in the last couple of minutes. Raul? Raul, you there? Okay, maybe I wasn't able to join us. That's okay. I'll just kind of see if I can get through them myself here. Mario saying, what is the cloud for? The cloud is to identify trends. So if price and the moving average is above the cloud, that's considered an uptrend. If they're both below the cloud, it's a downtrend. And if it's price or the moving average are overlapping the cloud, that's a period of consolidation that you do not want to trade in, okay? Paul is saying, can I use this on Forex? Absolutely. Forex, futures, equities really doesn't matter. The settings, Joseph is asking for the settings on the parabolic SAR. They are 0.02 and 0.2. Okay, on the parabolic SAR. Let me quickly see if there's anything else here. So just a couple of questions on the course here. Again, let me just quickly recap this. I'm going to go into a lot more detail on those 4 keys to day trading success and how you can build those habits. I'm going to share with you a way that you can quickly calculate a risk-reward ratio for any particular trade, so that before you get into there, you know how much you're risking and what your potential profit will be. I'm going to share with you my watch list and show you a way to build a nice watch list. We're also going to be talking about trading this with multiple time frames and how to identify the best time frames to trade with, and also how to trade this with options, or how I would anyway, and help you leverage this strategy. And then, of course, as a bonus, you get the 30 days of membership to our pro service. The link again is tradingwins.com/now, and all of that for $3. I think I'm out of time. Thanks again to everyone at Investor Inspiration for having me back on, and thanks to all of you again for sitting in. Thank you.